Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands, November the 3rd, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a way for this week to end. Following the release of last month's jobs added, we saw gold and silver come under tremendous pressure with the dollar gaining some more ground. Gold closed off about $8, $7.90 to close at $12.70. A 30-cent decline in silver, taking it well below $17 to $16.83, a 1.8% drawdown, and about a 0.25% gain in the dollar index, closing at 94.85. To say that this week was filled with a variety of economic data would be an absolute understatement. Starting on Wednesday of this week, the current FOMC meeting concluded and a statement was released. Yesterday, Jerome Powell was nominated by President Trump to be the next Fed chairman, and then today's release of the jobs numbers, all having a collective effect on the price of gold as well as silver, with gold settling down approximately $7.40 to close at $1,270.70, and silver losing 1.8%, closing 30 cents lower to settle at $16.83. However, it was this morning's job numbers that really tipped the scale and put tremendous downside pressure on both gold and silver pricing. We're looking at a 15-minute chart. This is the first right in here, and you can see that as the statement came out from the Fed meeting, the reaction in terms of gold pricing was muted, to say the least. The appointment yesterday with Powell was obviously largely factored in the market. As you can see, gold prices trading at a low of 74 and a high of approximately 82. In other words, a narrow and defined range. But today's jobs number was very interesting in that the initial reaction was for gold to trade subtly higher, up about $1, $1.20, before plunging to new lows on the week, actually trading to an intraday low of 1266 before recovering slightly as we went into the close and settling at 1270. What is most evident when we take a look at a longer-term gold chart, this being a daily candlestick chart, is the fact that gold pricing has been absolutely range-bound over the last week, with strong resistance up at around 1281. That is a 50% retracement of the entire span of this $163 rally, which began in July and concluded in September. And absolute support right now at the 61% retracement, which comes in at 1262. Now, we did have a double bottom that we identified over the last 3 to 4 trading weeks, and today's low did not take out nor close below that particular price point. As I said on yesterday's show, that we really need to see gold either break above 81 or break below 62 on a closing basis before we can get in a real technical sense of where this market wants to go in terms of longer term pricing. It must be noted, however, that the market sentiment has absolutely been for lower pricing in both gold and silver, with these lows being reached a couple of times over the last couple of weeks. And as I've said all week, a solid break below 1262 on a closing basis would really put our target in terms of lower pricing at the 78% retracement mark of 1236. And traders, it will be most interesting to see how gold and silver pricing open up next week, because this narrow defined range that has been so predominant in the market over the last couple of weeks will work itself out one way or the other. If it goes to the path of least resistance, and all things being equal, the fundamental data that is out there now remains largely unchanged, we could see gold pricing go as low as 1236. We would look to initiate a short position, but only if and when gold prices close below 1262. On the other hand, with Trump traveling to Asia throughout the next 11 days, if we see gold prices find some sort of tentative support at the 61% retracement and begin to bounce up, a break above 1281 would certainly signal higher pricing ahead. And traders, it is for that reason that we'll enter the weekend flat with no active trades in either gold or silver and look to see how the market follows through next week. The overall characteristic that we have seen over the last week, week and a half, especially in gold trading, has been a narrow and defined range with tops just at around 1281 and support at around 1262. We have gone on record stating that we need to see the market either on a closing basis move above or below the support and resistance level. And all things being equal, I am expecting lower pricing in gold throughout next week. However, there is a wild card. The wild card is the fact that Trump is on the road. He will be going to Asia, and we know that anything is possible in that case. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.